we suddenly are not thinking about what opposite may try to do. In a different words, meaning that if we are so bullish, right, usually we forget to check where the trap might be, where might happen that we are going to be trapped, right? In case of the current market analysis we are doing right now, right? Doesn't matter if you are a bull or if you are a bear, because we are prepared from both sides, okay? So I know, based on what we discussed on a higher time frame, based on what we discussed on the higher time frame, all right, guys? I know where I might to expect some kind of the supply and where I may try to take the advantage of that possible supply, as well as I know where to expect possible demand, right? Okay? That's simple. Now, what's important here? Why I've placed the line and the zone over here? Because especially this one, especially the yesterday Tokyo move, this particular move on the early candle, once we retest around the Europe during the European session, right? And we saw the rally. Now, please look carefully. Please look carefully here, all right? 5 seconds to remember about that candle. 1, 2, 3, 4, 5. All right. Now let's switch to the higher time frame. I'm not saying that it's the same size. All right. I'm not saying it's the same size or it's this particular one from the 20th of March is with upper shadow. But what I'm talking about is that once we broke through this significant level, what happened when we retest that level? 5 seconds. 1, 2, 3, 4, 5. You have to remember this stuff. You have to remember this stuff. So now, looks like very significant level. Why is even more important? Anyone? Why is even more important? 5 seconds. 1, 2, 3, 4, 5. Yes, it is live. Why it's so important? Because it's related to the weekly open blue dotted line. So it's very, very logical place, very, very logical level, very, very logical zone. As long as we are above, short-term perspective, positive. But once we are going to break lower, like this, I do expect immediately during the first retest, I do expect supply here, right? So in that case, what we discussed, what would be the target? The distance between the weekly open and the high of the week. Once we break this zone, once we break the weekly open, the target is going to be lower. We might to look for stops based on the possible demand we have from the daily chart. The zone over here, this one. and the levels before we created this high, and where we reacted when we approach again. So if you do, like me, intraday trading, if you like day trade, just focus on the higher time frame, where we are from the higher time frame perspective, trying not to trade each and every setup, even in the middle of the nowhere, right? Because if we are going to have something similar like what we are discussing on euro dollar here, but if we are going, let's say, one moment, as an example, all right, what is going on right now is going on right now. But let's say we have supply and the demand far away from the current level, right? Probably I wouldn't watch this setup, maybe because of the weekly open, but that would be for me no man's land zone in the middle of the nowhere. But because of where we are right now, based on the higher time frame, I like the situation we have right now. I like the scenario we are discussing right now on euro dollar. All right. So because of, I've mentioned possible demand, possible supply, Riley base, Riley drop base, all these setups we discussed 2 weeks ago during the first webinar. So right now, quickly, let's discuss them again. Let me open my presentation. So just briefly, not like before, step by step, just briefly, I'm going to get back into these 4 setups. Give me a second. So what we discussed previously, right? All right, that's the first one. What we discussed 2 weeks ago, we started. We made short summary a week ago, and we are doing the last summary today, right? The first setup, market is in consolidation. The market decided to go higher. Then another consolidation, and suddenly markets saying, no, we were wrong with this move to the upside. We want to go to the downside, right? During this part of the market move, actually, we don't have to do anything. We just have to recognize this on the chart once we are here. Why? Because the first initial move to the upside, that's where the initial demand, initial possible demand been seen here, right? But then when market decides, no, it's wrong, we are going lower, what is important? The move to the downside, that's the key here. Move to the downside took out the initial demand. There is no longer demand here, right? So the opposite move was strong enough to take out this initial demand. And that's the usual mistakes some, let's call them educators, are doing when they are trying to explain supply and demand, right? We can talk about the supply at the top over here once it was strong enough to push market lower below initial demand. That's the first thing, the key here. And here, really, we just have to have the knowledge to be able to recognize this setup, right? Then it's all about the retest. and how we are going to retest this possible supply. All right? How we are going to test this supply. Is it going to be the strong move to the upside? Because, for example, on a higher time frame, we hit some demand, possible demand from the higher time frame. If it's moved like this, if it's a strong move back towards this supply, I'm going to sit, wait